guys, and welcome to another episode of this weekly alts analysis series where we go through some popular altcoins and show you how to identify key levels of higher time frame supports, so you can use that to either dollar cost average in and or use for some longer term swing trades. So this week we're going to go through Vechain. It's very popular at the moment with its recent UFC deal, and also it's been around for a long time, so it's got quite a decent following and reputation. So we'll come to that in a second. First of all, we'll go through BTC. So I'm recording this just after the CPI data has been released, and inflation is higher than expected, so the market has taken a downturn, although not as bad as you would expect considering how badly the S&P in the traditional markets has dropped. But we are still at this monthly level of 29.3, which is a monthly support, which we have still not broken yet. It's still hanging on in there. If we break it down to the weekly, we've had multiple taps of this support now, and these two most recent weekly candles do not look great at all. It feels like we are hanging on by a thread. If we were to lose this monthly level at 29.3, in my opinion, the next higher time frame level of support is at 19k. If we have a look left, there is just no levels of support here. We moved up from 19k up to 41k with very, very little resistance. So we've not set up any areas of support there on the higher time frames. At least on the daily time frame, the next level I've got, should we break below the most recent lows of 28.5, would be 24.2k. And if we look left, we can see that was an area of consolidation that we had back in mid-December, the only sort of level, in my opinion, of support between here and 20k. So it'd be interesting to see, one, if we do break down today or over the weekend, and two, if we go straight down to 24.2k. But that's enough from BTC. Let's take a look at Vechain. First of all, on the USDT pair, and then, as always, we'll go through the BTC pair as well. So starting on the monthly time frame, as we've said in previous episodes, we're looking for areas on the higher time frames where price has stopped and turned around, and previous resistances and previous supports acting as support on the way down. So we'll use our rectangle tool, get rid of the magnet. So first area I'm looking at is this very bottom area here. We're probably going to have to zoom out a little bit just to see. So right at the bottom here, and I'm just going to zoom in a little bit more. There we go, that's better. So just going to catch the bottom of this candle here from the 1st of April, and I'm going to make it just up to these candle body closures there. And then we'll obviously extend it out. Happy days. We'll put it up to, let's go May 23. It sounds like a good time. So yeah, that would be an area of support for me. And the next area I'm looking at is this level here, where these candle bodies have stopped. So top of this September candle, September 2020. So again, we'll mark that out. Go along, and I'll make it as high as the next candle body close. We don't want them too big, and when we go down to the weekly time frame, we'll probably be able to adjust accordingly. We'll give those a quick tag. We've saved some templates. Happy days. And yeah, so for me, I would maybe have another monthly level just here. Look, just where the top of this candle is. July 2018, and just come across basically to where we are now, actually. Yeah, that's where my next level would be, just there. Oh, come down. Yeah, happy days. So give that a quick tag, and that would be my monthly levels, except that's just, sorry, my OCD won't allow me to leave it. There we go. Cool, happy days, and we'll just get it to the sip. Yeah, that'll do me nicely. So they're the monthly levels. Let's break it down to the weekly, and as you can see, our work's pretty much done for us. This is why you go start with a higher time frame and work your way down, whether that's swing trading, investing, scalping, always start on the highest time frame first and work your way down. The highest time frame relative to obviously what your trading style and method is. So in terms of a weekly level, I think just here where my cursor is, so just at the top of this candle wick here, and if you look across, it's then support, resistance, support. So let's draw that in. So we'll just do it roughly to start with, and then we'll neaten it up a little bit. Let's make it a weekly so we know which one we're doing. Happy days. Drag it across. So I think what we'll do is just have it underneath the candle body of the same candle we've used there. And if you come across, yeah, that's pretty much spot on. So catching all those wicks, all those candle bodies, and you see that little wick in there, that's pretty nice. And then in terms of another weekly, I think we've probably got a little one here, just where the bottom of these wicks are from January and February, and the little capitulation wick we had on the 22nd of May. And that will probably do us. How big is that? So I might wick to wick. Not sure, that might be a little bit too big. Let's have a look. Drag it out. Drag it out, give it a tag. No, it looks good to me actually. That looks fine. And there you go, guys. So as we've said in previous videos, it might look like these zones are taking up quite a lot of the chart, but if we just take a look, a drop from this monthly level to this weekly level, you're already looking at 15%. Down to the bottom of the zone is 20%. So you get a lot of profit in terms of, or you'll save yourself, you know, a lot of capital jumping out when you think the level's going to get lost and rebuying at the next level. Or if you're going, as I said at the beginning, if you're going for swing trades, so say price comes down to tap this monthly level down at, what's that, 1.9 cents, and then we get a rally. I mean, you're looking at 20 to 30% if it goes up to that next weekly level, which you can then obviously sell, rebuy either back at this monthly level or even maybe at the next level if it drops down there. So there's definitely some profits to be had either in dollars or in units as well. So yeah, that's it for supports for me. If we start rallying, we'll go through some resistances in the coming weeks as well. Vechain BTC, again, started monthly, looking for areas where things have stopped and turned around. So we'll start at the bottom just here, this candle wick, and we'll probably go up to that candle body just here on the 1st of April. So let's drag that across. Where did we say? May 23. Happy days. So yeah, just catch the bottom of those wicks, top of that candle body, which lines up nicely with this little wick here. And give that a quick tag. Monthly happy days. And then the next really obvious area to me, so we've got that level there as resistance, but coming down, we've got this wick here on the 1st of December 2019, and then the top of these wicks here as well. So let's pop that in there, and that's exactly where we are just now. So both on the USDT and BTC chart, we're sat right on support, and it's support back here as well. Look, as you can see, back in December 18, January 19, and yeah, I think that's pretty spot on. Just goes to those candle wicks. Yeah, I'm happy with that. Give it a quick tag, and I think in terms of monthly supports, that's it for now. Obviously, we've got plenty of resistances further up, but we're not worrying about that too much for now. Let's go for weeklies. So is there a weekly in between these two monthlies? I would say just at the top of this candle here, and if you look across, plenty of candle bodies and wicks that have stopped and turned around in there. So let's get a box on there, and then we can neaten it up a bit once we've drawn it. We'll go away. So drag it out, make it a weekly. And as I say, guys, when you start with the highest time frame, a lot of your work is done for you. So let's get that right on there. And then I think, zoom out a little bit, grab the top, and I think if we just catch those wicks there, that's spot on for me. Yeah, I like that. So obviously support here, loads of support here, all these wicks. You didn't get a single candle closure below until this one here in Feb. Resistance here as well. Support. So yeah, that's a spot on little weekly zone for me. And as I say, that's really it, guys, in terms of higher time frame supports. But you just look at the percentage gaps between them. Huge drop from this monthly down to that next weekly. And how about that weekly down to the next monthly? Again, huge, like 30%. But if you start seeing rallies, so if you start dollar cost averaging, let's go to the middle of this monthly zone. If it were to get down here, not guaranteeing it will, and I'm also not guaranteeing it will recover. But if it does, you look at how quickly the gains are made. So monthly to monthly level, you're looking at nearly 150%. So that's why we say on each episode, don't go too heavy too soon. Buy levels, don't just blindly dollar cost average in. And if you're confident enough, if you see a level being lost, cut it and then rebuy at the next one. Save yourself a lot of capital, and it's a really good way of increasing units as well, because you obviously get a lot more bang for your buck the lower it goes. So hopefully that's helped you guys. Really easy method of identifying key levels of support on higher time frames. So far we've got AVAX, DOT, Sol and Vechain. As I've said in the previous episodes, we'll do a couple more, maybe get 6 on the list, and then we'll go through the pairs and see how our levels have performed. So any questions or requests for TA, drop them below the video. Have a good weekend, guys, and I will catch you next week.